All right, welcome everyone to our February 10th, 2023 edition of This Week in Crypto. I'm your host, Brian. We may or may not be joined by Maxim today. It's unclear at the moment, but I will be going through as many metrics as we can as to explain exactly what's going on in the markets right now. Obviously, we had a bit of a pullback here in February. Not a major one. You'd still be up plenty of valuable percentages there if you jumped in at the beginning of 2023, and January profits are still prevalent. That being said, you can see that the majority of the assets here over the past week are in the red, mostly in double digits at the moment. You have a few exceptions. I see that Hex is up 38%, the Graph 55%, as one of the AI projects that really soared at the beginning of February. We even see that Immutable X, Mina, Maker, they're doing okay as well. But you can see, Aptos, after its incredible January, down 25% now. Phantom, same thing. After a great January push, now down 27% over the past week. Bitcoin and Ethereum both down 7% respectively. We're definitely going to focus a bit on those. And then as far as overall social volume, you can see Bitcoin and Ethereum are actually down a little bit in terms of discussion rates. Stable coins are up, and we'll talk about that as there were several issues with the SEC and the Fed and the overall US government potentially cracking down on crypto. Whether or not the rumors have some serious viability and this could impact the ability for US traders to be able to own and trade crypto, that remains to be seen. It's pretty early to be able to tell, and we've had plenty of these scares in the past, and that's sort of why I titled this this stream as what it is, kind of exercising patience, because oftentimes, it just seems like it makes too much sense. We go on this incredible rebound month in January, and then all of a sudden, the government is cracking down. Well, I guess it's time to get out. That's what our instincts say, just because the government is suddenly cracking down right after a big surge. It just feels like it makes sense for a lot of people and is a natural reaction. When in fact, these can often be the moments where being patient, holding on to your assets, leaving your portfolio alone, it can lead to great rewards as other people are jumping off ship and oftentimes trading at a loss, even since many people were adding on or buying back into crypto in late January, right around the top. So let's look at a few of those topics here. And don't forget, guys, that everything we talk about on these streams is not to be considered investment advice. We are here to make sure that you are getting the most objective data and news related to crypto without, swaying you one way or another. Our job is to report metrics based on what has happened in the past and what we can expect going forward based on historical patterns we've seen through similar instances in the past year. So let's start with Gary Gensler. He announced that Kraken has been charged for the unregistered offer and sale of securities through its staking as a service program. And now they're basically being asked to provide proper disclosures and safeguards required by our laws. Let me read my notes here for a little more context. So yeah, they're essentially charging Kraken for its staking services. We also see here that the IRS is summoning. They're summoning for against Kraken right now, and that's a concern. We obviously have to put a lot of trust that Kraken has properly, kept track and is able to identify the correct federal income tax liability of U.S. customers. This is all FUD right now, right? We're seeing these news stories, and it's going to cause the crypto community to be concerned and more likely to sell off their assets. That is going to be the, unanimous, or it's either going to be a lot of people overreacting and selling, or a lot of people just doing nothing. But there aren't a lot of people who are going to read this news and say, this is fantastic for crypto, right? So that's how we know that this could potentially be a sell the rumor, buy the news situation. We also see here that the NYDFS is investigating stablecoin issuer Paxos Global, which operates the Pax Dollar and Binance USD stablecoins. As I mentioned, stablecoins are getting a lot more discussion now, and these kind of headlines are exactly why. On this one, additional actions coming from the SEC, exchanges and stablecoin issuers will be getting Wells notices in the coming days and weeks, specifically mentioned Circle and Paxos. So all eyes are going to be on Paxos, it appears, here in February, as we figure out just how big of a deal this is going to be. Circle app and Coinbase, this individual counted 47 separate transactions between Coinbase and Circle that are all either burned, minted, or transferred exactly $175 million worth of USC to Coinbase. So he's identified that something suspicious is going on, to say the least, indicating that Coinbase could know something that the public does not. And yeah, those are just some of the headlines here that we are keeping track of. We also have the CPI next week. Take a look at this tweet here. It should be a very, very telling CPI report. Obviously, we had very good job news reports in January, and that helped fuel the rebound that we saw. I saw, at least here in the US, it was something like 50-year record since unemployment had been this good, which is a complete turnaround from 2 years ago when we saw decades high unemployment in a bad way. Tons and tons of people being unemployed. Now, tons and tons of people are employed as a ratio of people employed versus not employed. So there's going to be a lot that rides on this. As this tweet says, if the CPI comes in above expectations after the strong jobs report, Fed pivot hopes are dead. If it comes below expectations, then the bull party can continue. So typically when we have a very big CPI report coming up like this one is, I remember the last one was like in I want to say October or September. There was a highly anticipated one as well, as prices were starting to show signs of turning around before dumping again. This one will have a lot riding on it, and we will likely, almost certainly, see a lot of chopping going into the next report, which, checking my notes, it should be on the 14th. Once that happens, we'll suddenly see a big reaction in one direction. And there's one more here I want to show. Yeah, it's on Tuesday next week, so that would be the 14th, Valentine's Day. Month-over-month figures for January are expected to tick higher, so we need to tread lightly. So this person is saying that there will be an uptick that shows inflation has increased, and we need to be ready for the negative ramifications behind that. Now, this is all speculation. As always, we need to wonder whether prices are already being baked in with the expectation that inflation is going up. So, this correction may have already been the reaction to that, or it could exceed the increase that we think, and we see even a larger retracement than we are anticipating on the 14th. Anyways, that's a lot of Fed and government news. Why don't we start talking a little bit about the actual metrics on the on-chain and social end of crypto? Beginning with this, we haven't looked at this in maybe 3 weeks or so, but this is the ratio of positive comments like buy, buying, bought, bottom, bottomed, or bullish versus negative comments like sell, selling, sold, top, topped, or bearish. The blue, when highly exceeding the red, generally indicates there's a little too much euphoria going on. I see one solid point in which that happened here on February 2nd, which not coincidentally was pretty much right in between these two local tops before prices moved down. Then we saw a lot of positivity all of a sudden right here as well, and prices plummeted right after. There can be exceptions as well, like this here. I think this was a sign that a top could be coming, too much euphoria, and it still was able to climb up a little further. Here as well, everyone got euphoric after the big surge on January 20th. It ranged for a very short period of time and then ticked up again. But look for things like this, right, where the negative comments are actually exceeding the positive, meaning there's a lot of fear in the water. I'm not seeing that right now, but if you did, that would be a good sign that prices could rise as a result. We don't see it very often. We saw the red peaking over the blue right here, obviously right here on the 26th, and right here on the 31st, with mixed results. But sometimes there's a really extreme example, and that would be a great time to pounce. you can see right now, we're actually seeing kind of a dead period. It's obviously early in the morning still on the Pacific time zone where I am, PST. But watch these next few hours as traders are going to be, I think, starting to show a little bit of jadedness with equities down for a third day in a row here, fourth day in a row, actually. I think every day but Monday prices dropped in the S&P 500. So equities have taken a bit of a hit along with them. We'll go over that correlation here in a moment. But notice how there's just very, very few negative comments, and even positive comments are down. But if positive comments start to climb up over the next few hours as we head into the weekend while negative stays low, we need to be careful, because that means there's optimism that it's dip buying time, and people think that we're about to bounce back up to 23K, maybe 24K, and that makes it less likely if there's a lot of optimism there. Why don't we look at that correlation I just referred to now, and then we'll come back to the whales and look at some of the other key on-chain metrics that are happening. Let's see, S&P, here we go. Okay. We'll make that an area chart. All right, so we've got here Bitcoin in green, Ethereum in red, and the S&P 500 here in teal. Typically, we like to see absolutely zero correlation between Bitcoin and the S&P. Not an inverse relation where the S&P goes up and Bitcoin goes down, or vice versa. Just no dependency whatsoever. It's been well documented that over the past year here, as we can see, it's a whole lot of similar ranging between crypto and equities, which normally happens during bear markets. We typically start to see crypto start to click with equities and almost function like a high leverage tech stock. That's not what a lot of decentralized asset traders are here for. We want to see crypto kind of be an alternate sector compared to what is happening in banking and in government and in company valuations. But you can see, as prices declined, a lot of similarities, a little bit of separation here in August, fell back down. Then, of course, we had the FTX collapse where crypto got hammered hard while equities didn't so much care about that news story in relation to crypto. So it was able to take off. This was a big point of separation. But then they started to click back together a little bit. And you can see that ever since, they are staying very, very tight. If I zoom in here just to like the last month, yeah, you can see just how close that green line and teal line is. If Bitcoin goes ahead a little bit, crypto kind of catches up there, vice versa. And Ethereum, they've really taken a hit compared to Bitcoin and the S&P 500, obviously going above 1,700 just last week, and all of a sudden, here we are back at 1537. So in short, correlation is not looking great for the upcoming future of crypto. We would need to see some positive news coming from equities markets right now to feel confident that crypto will surge once again like it was in January. Without positive news and equities continue to drop like they are, it's going to be very hard for crypto to find separation based on recent history showing how tight this correlation is. Now let's take a look at how the whales are doing here. So Bitcoin's shark and whale addresses, which we deem anywhere between 10 to 10,000 Bitcoin held, they've been ranging. We saw some very good signs beginning in late November where they were accumulating quite heavily over the next month. And then since maybe right before Christmas time, it kind of went up and down. And you can see the point in which they started to take profit after the big rise here. Right on the 23rd, they were holding 67.3% of the supply collectively. They've dropped 0.28% of the supply, which is a ton. I can merge that together and show you just how much, 10 to 10,000. So they were holding 12.96 million. Now they're down to 12.92 million. So in the last 2.5-ish weeks or so, they've shed 42,507 Bitcoin, which is worth tens of millions of dollars. It might even be hundreds of millions. Either way, that's a worrisome sign when you're trying to put together an argument that prices are going to rise. We typically are going to see these rises, when the green and pink line here are going up, like they were from early December through mid-January. And if we take our attention away from Bitcoin, take a look at how, Tether, they were really, really skyrocketing for most of the last 6 months. And up until really the beginning of February, they just continued to increase. And now they're down just a little bit over the past week. But that's only Tether. We can see that USD coin is still going up. It could be related to the interesting patterns that are happening with Coinbase, wherever I can find that tweet that we just mentioned. This one, yeah, USDC and Coinbase, 175 million transferred to Coinbase. So yeah, I would speculate that that's probably related to Coinbase's 100K to $10 million addresses continuing to rise. BUSD, on the other hand, they're continuing to plummet. They've been going down since New Year's Day. So that's a concern. And DAI is pretty much ranging right now. So of the four top stable coins, 3 of the 4 are starting to look a little concerning, with only USD coin continuing to show a pattern of accumulation. If you combine that with the fact that Bitcoin's shark and whales are starting to move back down, there's a little more argument for prices moving down than prices moving up, at least for the near future. But of course, things can change very, very quickly. And if you have Sandbase Pro and you check throughout the week in between now and the next This Week in Crypto call that we have, you might suddenly see a big surge that changes everything. Quickly on the Ethereum side, we continue to see that the sharks and whales there holding anywhere between 100 to 1 million Ethereum. They are continuing to move down to 65.3% after being at 66.3% just 2 months ago. Social dominance of Bitcoin, we're still seeing a lack of Bitcoin discussion right now. There's not much going on in terms of Bitcoin beginning to get in the spotlight once again and having it as a focal point compared to all the altcoins. So that's disappointing to see, because as we've documented, we want to see spikes above 20% of discussions, which is marked by this 0-axis line, in order for prices to be justified to go up long term. We could still see, really short-term surges like this, but sustained social dominance spikes like that, that's where the breakouts happen, as I'll illustrate here. This is the last 2 years. And you can see when it's way above, like it was back in early Q3 of 2021, big breakout, because Bitcoin is the big discussion. You can see after the big plummet in mid-2021, Bitcoin started getting discussed a lot. And yeah, there was a couple months where it was still ticking down, but eventually this was a sign that we would rebound. And eventually that helped push us all the way to a new all-time high in October and November of 2021, where there was lots of healthy Bitcoin discussion. Oftentimes it's, just a matter of hitting a key support or resistance psychological line, like going below 20K for the first time in a year, or going above 60K for the first time ever. The stuff like that is what causes people to start, paying attention to Bitcoin again and discussing it. And then that can perpetuate a more healthy market as the volume and utility of the number one asset that drives all other assets starts to rise again. But you can see really ever since maybe August of 2022, the past 6 months, not a lot of times in which Bitcoin has been discussed at a healthy rate as traders are, in my opinion, desperately kind of trying to jump from one asset to another, hoping to be on the right pump and dump train. Funding rates, we'll get to that in a moment. I definitely want to check out what's going on there. Let's do that now, actually, and then we'll go back to some Bitcoin stuff. So things look a little better than they did just a couple days ago. I was checking this out on one of my calls with a Santiment partner, and it was almost exclusively red, red, red all over the place, which indicates that traders were mostly going long and expecting prices to rise, which, just like we talked about with sentiment, isn't good. We want traders to expect prices to drop and put their money where their mouth is, opening up shorts everywhere they can. Right now, it's kind of a mixed bag. Still, obviously, more longs than shorts, but there is a sign of some fear going on. Axie Infinity, Bitcoin Cash, that's a huge, huge short going on BitMEX at the moment. So that's interesting to see. Ethereum actually is seeing some shorts opening up, perhaps related to some of the securities discussion going on with it, and how traders think that this asset in particular might take a hard hit if the SEC and the US government begins to crack down on crypto. Right next to it, Ethereum Classic also seeing some shorts. Hedera getting shorted as well. Monero, Near, Polkadot, and Solana among just some of the top 100 or so market cap assets that are seeing shorts. I don't see any that are seeing excessive longs. 0.1 basically means it's kind of just around its resting state. So no signs of real greed at the moment, just either, neutral, slight longs, or some big, shorts for a few assets that are standing out right now. While we're here, let's talk about the Kraken issue. I was talking with our Santiment staff right before this call, and LDO, Lido DAO token, is obviously a big staking token that gets impacted by all of this Kraken news. And we can see what's going on here. Active addresses, they took a big spike just in the last 3-ish days or so. You can see that the active addresses are up, almost reaching the same spike that we saw when staking was really soaring back on January 9th and 10th. Market cap still up quite high, which is great to see. I mean, since the new year, go right there. Price is up 153%. And it's pretty clear that Lido DAO is really being looked at as a leader in staking. And if some negative news comes out, there's a concern that a lot of people will move their money out of staking, which would affect Lido's price. The reason this asset in particular is such a point of interest right now is because it's kind of a reflection of how confident traders are in the overall markets and their willingness to hold for a long period of time. People don't want to keep their money in a staking asset if they believe that, in a month prices will be significantly lower. This is kind of a long-term asset compared to the, antithesis of staking, which might be like Doge or Shiba or something, where people are going in and out in a very short period of time to try to catch a pump. You can see network growth. There are still tons and tons of new addresses being created just yesterday, so this is a good sign. January 8th is the biggest spike we saw, but yeah, the one we saw yesterday is the third biggest spike in terms of network growth. So it's interesting that happened right at a local top, but we'll have to see if this lasts and watch to see if there's continued new addresses being created on the Lido DAO network. Exchange flow balance, take a look at this. Huge rise in coins going on to exchanges right now. So even though there's a big network growth spike, there's also a lot of coins moving onto exchanges, which indicates that usually people are interested in selling, moving away from their Lido DAO. So it's obviously incredibly polarizing right now. The MVRV ratio right at 0 at the moment. So trading returns for the 30-day scale, not showing anything special at the moment. Just a lot of kind of break even once again after major profit was showing here in early January. Also of note, prices for Lido DAO right now, it's sitting at $2.41. So we're looking here at, I don't know what I would call these, maybe guppies, and then small sharks and large sharks for Lido DAO. We can see what they're doing. The red line here, so this would be the whales, 10 million to 100 million coins. That's anywhere between, $24 million and $240 million or so. They were holding about 57.15% 2 months ago, and they're down to 56% now. They were down to about 54.6% just yesterday. So they're fluctuating wildly at the moment. Yeah, it looks like, I mean, I would have to presume that these are a lot of exchanges. And if they are increasing, it may not necessarily be a sign that it's, active whales. It could just be liquidity fluctuating wildly based on all of the coins that are moving onto exchanges at the moment. It's hard to say. I'd pay attention to this yellow line though. The, address is holding anywhere between $2,400 to $24,000 in Lido DAO, just continuing to rise. They're up to 0.831%, which may not sound like a lot, but if we zoom out, to the last 3 years since the beginning of Lido DAO, it's just been a steady rise for them. So that's great to see. The blue line, constant rise as well. So this shows that there's still a lot of trader confidence in Lido DAO. We could even go up a little bit, and we see that the 10,000 to 100,000, after seeing a dip in September through November, they're now going up, and 100,000, a million to 1 million. That would be, yeah, pretty promising too. So all of the groups right below the red line look good. I missed one here, the 1 million to 10 million. And this one's a little interesting. It looks like they definitely increased beginning in mid-December. I would still call that a good sign too. I mean, in terms of January and February, it's not looking like there's any major dump. They've certainly slowed down their accumulation they were showing throughout the last couple of years, but I'm not seeing this as a massive concern. So, maybe this bright yellow, the 1 million to 10 million is a good one to look at. And then the 100K to 1 million would be a good one to look at if you want to take a look at a coin that reflects the long-term, positive versus negative sentiment of crypto. And then finally, we can look at the daily active addresses versus market cap. So yes, we've seen that daily active addresses have risen, but not much compared to how the market cap has risen because the ratio is staying very low here. So we just wanted to show off Lido DAO there. Let's get back to Bitcoin because I know a lot of you are interested to see exactly how healthy the number one asset in crypto is looking right now, since that has big ramifications on the rest of the markets at all times. Go back to the last 6 months, check out what we see. Trading volume, it's staying, relatively high ever since the big uptick that happened in mid-January. Transaction volume is up a little bit. I do see that as of yesterday, we've seen the biggest transaction volume. Let's see if it beats out this. 526 there. Yeah, so this is the biggest transaction volume spike since November. November 23rd, we're looking at about a 2.5-month high that just happened yesterday. That's worth keeping an eye on, especially after a dip. you know, considering that transaction volume spikes often correlate with a price reversal, I actually think this is a good sign. Now, it's not really a major spike, even though it's a 2.5 month high, but I like seeing that it's going up right after a huge downswing like this, because it could mean that we might have seen the end of that downswing for now. Of course, it all rests on all of the SEC news and government decisions that are going to be made about crypto and just how much this supposed crackdown is real versus kind of a bluff. But nevertheless, that's a good sign. We're also seeing that Bitcoin's daily active address is spiking a little bit. Yesterday's daily active addresses was the highest since January 10th. So exactly 1 month ago was the last time we saw this amount of unique addresses surging as much as they are now. MVRV, also a good sign right now after the big correction. We've gone from the average trading returns for 30-day timeframes being at about plus 22% 3 weeks ago to now a negative 3%. So if you were to add on to your position or open a position in Bitcoin right now, you'd be doing so at a lower risk than average. And I like to see that because it indicates that, you know, traders are now back in the red. And obviously, we don't wish for other traders to lose money, but in terms of your own decisions right now, you would be buying in while others are in more pain than they've been in pretty much since late November. So 2.5 months, once again, since we saw this level of opportunity, which is not a big one. You know, a true opportunity zone for Bitcoin is usually around right around there. And if you see the MVRV get below that, that's a clear sign. Just like we saw here, this was the dip buy opportunity on November 8th and 9th to get back into Bitcoin. Historically, if we back it up to the last year, this will change the line a little bit. So right around there. Historically, you can see there have been 3 points over the last year where the 30-day MVRV was clearly below 15% back on May 9th through 11th or so. This would have been a nice time to buy according to 30-day MVRV. Mid-June would have been a good time right here. November 8th, 9th, as I mentioned. Those are really the 3 points that the MVRV has been clearly below and in that opportunity zone. And all three ended up being pretty good, at least short to midterm opportunities to get in. Now on the 365-day MVRV, it's moved up a ton. Obviously, with the January surge, it went from, you know, way in the red, where year-long active traders were down an average of negative 46%, all the way up to positive. Very briefly, they were up to 0.6%. Now they're back down to negative 7. The reason this matters, if it is below, that means long-term wise, you are in a better opportunity to catch a rise than historically. If it's above, as we very briefly saw here in late March, that literally was the top when it crossed above 0%. Are we seeing a repeat now? We'll have to see, because that's exactly what happened again on February 1st. So keep that in mind. I'll show our MVRV model really quickly. I need to update this because we haven't changed the assets in a while, but stay tuned. We'll have some updates for you very soon. It's kind of a mixed bag now. I looked a week ago. I think we showed it on This Week in Crypto, and they were almost always, or almost all of these assets were in orange and red. And of course, it's doing a refresh right now. But from what we saw right before it started refreshing, it's kind of a mixed bag, mostly kind of a slight opportunity for most altcoins because they got really hammered over the past week. But I think for Bitcoin and Ethereum, they're about even right now. And just like we showed with the 30-day and 365-day, they're kind of hovering around that 0% line. I won't bother waiting for it to refresh right now so we can move on. Okay, let's see. Did I lose my charts? Oh, here they are. Okay. So Besides funding rate, which we already went over, whale transactions continue to stay low. Not a lot going on here. I won't bother commenting because we really just look for big spikes to see direction changes, and that's not what's happening at the moment. We touched a little on supply distribution, but let's look a little more at the actual amount of sharks and whales that are fluctuating right now. 10 to 100. Let's zoom into the last 6 months. It looks like they're starting to increase once again. They were flattening out here in the second half of January, but I like to see that just in the past 3 days, we've seen 183 new 10 to 100 Bitcoin addresses, or at least the net difference is 183. On the 100 to 1000, it isn't looking quite as good. It's kind of just hovering around even for most of the past week, if not scaling down just a tiny bit. The 1000 to 10,000, you can see this was the foreshadow. Let me overlay price really quick here. Right there. Put that in bars so it's easier to see. Yeah, so the yellow line, this was clear foreshadowing that the key whales holding 1,000 to 10,000 were taking profit from the 25th to the 27th. These 2 days, there were 21 addresses who dropped out of this tier. And it didn't look like they added to the 100 to 1,000. So these were some big profit takes where they didn't just drop down one group. They probably just dropped out completely or massively to the point they weren't even shark addresses anymore. And since that time, over the past 2 weeks, it's at least started to climb just a tiny bit again. So I wouldn't be terribly concerned by the lack of addresses or anything. It looks like they're kind of hovering. Just like we saw with the percentage of supply, same thing here, 1, 2, 3. They're all kind of staying flat at the moment. So I'm not terribly concerned either way. I'll look at the ratio in just a moment because I want to include Ethereum. Mean dollar invested age continuing to climb. Dormant tokens are staying put. Not a lot of big action that would indicate that a bull run is right around the corner. Network realized profit loss, no big spikes in either direction. We do see that supply and exchanges, if I zoom into just the last month, slight uptick in the last couple of days. Nothing notable though. I wouldn't be too concerned about that. We already touched on social volume and dominance. It's still staying low for Bitcoin, unfortunately. And if we look at weighted sentiment, which is measured by the amount of discussions in Bitcoin multiplied by the positive versus negative ratio that we're tracking based on our algorithm as to whether a comment is looking bullish or bearish toward Bitcoin, it's staying flat at the moment. We actually saw a lot of negative sentiment over the past week here before it kind of neutralized in the past 24 hours. If we continue to see a lot of negative sentiment spikes like this, that would be a nice sign. But obviously, this metric has had its share of anomalies because there was a ton of negativity in May and June, and it ended up not mattering as prices dropped anyways, even though we historically see that negative sentiment will lead to rises and positive sentiment should lead to falls and local tops. Either way, I still think this metric is relevant and keep an eye on it as we head into mid-February and March. All right, and as mentioned, let me look at the ratio of on-chain transaction volume and profit to loss here for both Bitcoin and Ethereum. I've got a better template. This one, here we go. So looking at the last 1, 2, 3, 4, 5 weeks, we were seeing tons of profit taking going on, especially with Ethereum here, but also with Bitcoin. Bitcoin's here in blue. When you see big spikes like this, it makes tops more likely because profit-taking transactions are much more prevalent than loss transactions. You can see it started to neutralize here in February, but all of these big spikes forewarned that a local top was likely coming up and that is eventually what happened. Obviously, the most comparable spike happened way back in March, where Bitcoin, right at the tail end of it, that's typically how these bars work, corrected way downward. It's not a perfect metric, otherwise this would be the only thing we had to look at anytime we have it this week in crypto. But I do think it's a very solid alpha metric for us to keep an eye on. And right now, after all this profit taking, look at where we're at now, just in the last 24 hours as this week is being compiled. Now it's a lot of lost transactions. So people who bought in late January or even right at the beginning of February, they're saying, all right, I don't want to be a part of this. We're seeing prices start to move back down just like we did in 2022. I'm going to get out at a lower price than the price that I bought in for. And that's why we're suddenly seeing a huge ratio of lost transactions compared to profit. If this holds and it stays super negative like this, it would be a solid sign that capitulation is coming and we see another bounce, kind of like we did at the end of this bar in mid-June of 2022. And even like these here in late November of 2022, after the FTX collapse really spooked a lot of people. All right. Let's see what else is going on here. Let's take a look at Ethereum really quick. I wanted to put a little bit of a spotlight on it because it's become increasingly polarizing in the last couple of weeks, as it's being discussed again as a security, and tax ramifications are a concern. Things that might jeopardize the run that Ethereum's been on as it recently jumped above $1,700. So as far as transaction volume goes, staying neutral, not a lot happening there. Going down to utility, daily active addresses, very low at the moment. Circulation, still low as well. On the topic of circulation, let's take a look really quick at both Bitcoin and Ethereum. As far as its unique tokens moved versus its current market cap, you can see on Bitcoin, another big red bar here so far in February. This would be its 1, 2, 3, 4, 5, 6, 7th straight month of a bearish signal coming from this model. And long red stretches like this, it's kind of normal to see prices move down. That's kind of the price prediction value of this model here. Is you see long stretches, it generally moves the direction of the pattern. This big green stretch was an anomaly, absolutely. For those who critique this model, it's pretty hard to defend it when you see all of this positive circulation happening and prices go down anyways. But normally, when you see a lot of green like this, that's when the prices rise. For now, though, lots of red, and we have to be concerned on the Bitcoin end. Ethereum is arguably even more accurate, because circulation correlates a lot with price for the number 2 asset in crypto. And you can see it kind of jumped up and down between very bullish, as it correctly predicted prices would go up in June. And then in July, 2 straight months of red, prices went back down. Green again, prices went up. Red, price went down. It's amazing how spot on this model was. Finally, we had a green one and prices still went down. So that was incorrect for November. Could have had to do with the FTX implosion, where there was a ton of circulation where coins were moved, but not for the right reason. And then finally here, we saw December and January where we didn't see enough circulation, but it was arguably propped up by, Bitcoin having a great, 45-day stretch or so. And now we're here in February with another red mark. You can see the only other time, I guess there was this 3-month stretch as well, but this was the longer one I'm looking at, back in July to January 2020, where prices were 200 and below, way back below where prices are now. And there were 7 straight months where we saw very bearish circulation that led to prices going down. So just be forewarned that according to this model, red stretches like the one we're on, once again, can be a bit worrisome for the future price of Ethereum. All right, heading back to our main metrics. We see that the 365-day MVRV is just below even, -6%. Really isn't much in either direction when it comes to, a metric where we've actually seen it at -46%, just about 5 months ago. So it's pretty much break even there and break even on the 30-day, maybe arguably a slight opportunity at -3%. Anytime it's below zero, that's a good sign for an argument to buy in. But, not extreme in either direction. That's the message I want to convey. Funding rates staying pretty wild at the moment, I should say. I was going to say neutral. But if we go back to our model and we look at Ethereum, we actually did see that it is getting a slight short bias right now. So that is a good argument for a short-term rise for Ethereum. It may change, though, just in the next day. So keep a close eye if you're trying to swing trade based on people shorting or people longing an asset. Whale transactions, pretty similar to Bitcoin, not a lot going on at the moment. We obviously saw increased engagement in mid-January, but that's kind of tapered off here over the past 3 weeks. I already touched on supply distribution and ratio of on-chain transaction volume in profit to loss. Mean dollar invested age, dormant coins continue to be dormant, so no signs of a big bull run breakout long term. Net realized profit loss is neutral. Exchange flow balance. It is good to see that the supply on exchanges is just continuing to tick down. It looks like 11.17% is pretty much matching. No, it went below. So this is the lowest we've seen for Ethereum, and let's see how long. At least 3 years. At least 4. Yeah, so we have to go back to June of 2018. We've gone almost 5 years since the supply on exchanges for Ethereum has been this low. That's pretty remarkable, and maybe something we can actually do an insight for you guys on and talk more about the ramifications of that. But in general, any asset that is not seeing that much of its supply on exchanges generally is a good sign, because it means there is less risk of future large sell-offs happening. People move coins to exchanges pretty much for one reason, and that's to sell, not to if you've got 5 Ethereum, you don't move it to exchanges so you can buy 5 more and then have 10 on exchanges. You're moving 5 Ethereum because you likely want to reduce some or all of that. And right now, it's a good sign that coins are moving away from the possibility of coins being sold. Social dominance, we are seeing a bit of a rise, with the discussion of it being a security once again. Social dominance is almost back above 10% for the first time since September, if I'm seeing this right. Let's go back to just the past 6 months. Yeah, so I mean, we see some short-term spikes where it's definitely above, almost hit 15%, and that was the first time it got that high since late September. So that's pretty significant. Ethereum is in the news again. And if you remember, the September news was all about the Ethereum merge and post-merge that happened right around here, September 14th and 15th. Weighted sentiment, yeah, that's interesting to see. A big negative spike. Let's zoom out a little. Yeah, this is significant. It looks like there's a lot of negativity going on for Ethereum right now. You can see what happened the last time there was a lot of negativity, starting here. If I just go to the beginning of this week, this was way back in February. This was just right at the moment that Ukraine and Russia announced their war. I think it was like February 23rd or 24th, like right on the dot. And since that time, if you go to the peak, during the negative sentiment, yeah, price went up 48% for Ethereum. So it is good to see negativity toward Ethereum, and there is a correlation. We talked about the anomaly that happened in May and June. This was the same across the board. But yeah, I mean, there are definitely signs that when you see sentiment for Ethereum this negative, it does equal a short or midterm bottom. Just, let this week play out a little more, because this is a short sample size right now of only about 24 to 36 hours so far since this new bar started compiling. Either way, I like it. It seems to be a good sign, along with the fact that funding rates are short. So people are putting their money where their mouth is in terms of their negativity toward the number 2 asset in crypto by market cap. Development activity also appears to be rising at the moment. That's always nice to see. Ethereum is always among the leaders in terms of distinct GitHub notable submissions that actually show proof of a coding team working to improve the asset's viability and innovation. You can actually take a look, since it's been a while since we looked at this great article written by one of Santiment's former team members. Not at the GitHub itself. We want to look at development. What was it? GitHub. Here it is. So this was written about 4 years back, almost 5 years back now, but it's still the same now, the reasoning as to why we find development activity so important. GitHub activity, when rising, shows that the team believes the project will be successful, it's shipping more features, and there's less probability the project is just an exit scam. I don't think there are a lot of people who look at Ethereum as an exit scam. Some people may just be against it for other reasons, but clearly Ethereum's team is working to improve it all the time, increasing its likelihood of mass adoption down the road, things like that. So if we go back here and we go to our screener, anytime you guys want with your Sandbase Pro memberships or the trials that you have open, you can go to dev activity 30 days and see the last 30-day rolling average for the amount of notable GitHub submissions. We remove things like just regular Slack updates and noise that might skew the data. So this is a legitimate activity that shows the team is looking to improve. As you guys have probably followed Polkadot, Kusama, and Cardano, they've kind of changed, spots a little between first, second, and third. Polkadot and Kusama, if you guys don't know, they share the same GitHub repository, so they're always going to be identical. But them and Cardano, they've consistently been top 1, 2, and 3. Moving down, we see that Status continues to be a top 10 asset. Right now, over the last 30 days, it's actually number 4. Decentraland, a popular DeFi asset, and ERC20 coin, it is sitting at number 5 right now. That's an improvement for them. I think they were at like number 10 about a month ago. Internet Computer's way up there. Cosmos, interestingly, at number 7. They've been climbing. Filecoin is consistently in the top 10 at number 8. There's the aforementioned Ethereum at number 9. Vega at 10. Hedera at 11. Interesting to see Hedera rising the way it has. We've actually been reached out to by that team a little bit and have been talking about their on-chain metrics recently, because they're interested in their own health of their asset. IOTA at number 12, Flow, Aptos, which has seen a correction lately, but obviously had a massive January. They're number 14. Chainlink, a very popular asset on social media, at 15. Solana, polarizing asset to say the least, at 16. Osmosis, Audius, Lisk, and Holo round out the top 20 there. So if you're looking to hold an asset for the long term, and you want an asset that is constantly trying to be innovated by its respective team, this is a very good resource for you to look at to help make those decisions and, sort of put your portfolio together accordingly. All right, I'm going to take a sip of water. And Balresh, if you want to look through the chat really quick, we have time for about 10 minutes of asset analysis based on what the people want to see.
Okay, I think today we have multiple people in the audience that would like to us to take a look at ADA, at Cardano. There was also a suggestion for COTI, C-O-T-I, which I think is somewhat related to Cardano. And now we also had a question for Solana.
Got it. I'm not sure if we're going to have, well, Cardano, we definitely have some on-chain analysis, but let's take a look at COTI first.
Oh yeah, I, not Y.
I, not Y. Got it. So that shows how much I know about COTI. I've not been watching it much, and I can see why it's outside the top 100 as the 260th largest market cap asset in crypto. So forgive me for not knowing much about this asset, but let's take a quick look and see what metrics we actually have for it. So it is not an ERC20. As Balaresh mentioned, it is related to Cardano. I don't know if it uses the same blockchain tech as Cardano, but either way, we're going to be limited on the amount of metrics we have because most of our expanded assets that have metrics are ERC20s, Cardano, Binance Coin, Bitcoin Cash, XRP Network, Litecoin. So those are the ones you'll typically see us have all the metrics. Either way, there's still some stuff we can look at here. COTI's volume, I can see why there's some interest. Since New Year's Day, it peaked at jumping about 135%. And since its peak on January 26th, it's been on quite a free fall, dropping 30% in price. So it's been kind of a tale of two halves here. Trading volume has dropped off a lot, but is still up compared to the dead area that we saw in November through mid-January, right before it took off. Typically you want to see a big rise in trading volume like we did here. This looks a little more like profit taking. If it's a more gradual rise in trading volume, kind of like back here in September, that's a sign that the trend can continue, right? So if you see trading volume rising into a trend without it being just a massive sudden spike, which often indicates a correction is coming, that's a good sign that there's some long-term viability. But right now, it's dropping and trading volume is not really showing any signs that the trend will continue. So that's not the worst sign. If it really drops off again, like it did in the early part of February a few days ago, that's a good sign that the drop won't last much longer. And even just this tiny uptick here, that could be a good sign over the last 24 hours that the trend is finally breaking. And as it moves up, if it continues, if trading volume is gradually moving up with it, that could be a rebound sign. That's more on the TA end of things than anything. But trading volume analysis can still be viable in relation to all of the on-chain and social analysis we do here at Santiment. On the Binance funding rate side, we did see a lot of longs here. I'm not surprised. So a lot of people were trying to buy the dip after things started correcting in late January and early February, but it didn't really go their way. That's typically how funding rates work. Prices move the opposite direction of all of the leveraged longs and leveraged shorts out there. And now it's neutral. I'd look to see if it starts going short again. That would be a good sign. Obviously prices still dropped throughout May through December as all these shorts were going on. But you can still see that, when the shorts got excessive, there were short-term rises here. And that's something to keep in mind. And mostly the price was just going down because all of crypto was going down. And when you're the 260-something largest asset in crypto, you're going to mostly cater to what the top asset, Bitcoin, is doing. But in terms of, if Bitcoin stays flat, that's when this funding rate starts to get really viable. And you want to look at, when things are going long, like they had been over the past week, and when things are going short, and doing the opposite generally will provide you with positive results. No whale data, unfortunately. Let's see some social stuff. Yeah, it's definitely been in the news lately. We've seen the second largest social dominance spike of the past year here. A lot of people likely talking about buying the dip. and then another social dominant spike here. You know, these big spikes are usually the sign of a correction. So I'm getting a lot of notifications that are covering the screen. Let me move this off really quick. Okay, that should be better. So yeah, I mean, you can see pretty clearly the largest social dominant spike happened back in early April of 2022, right at the local top, and then free fall. Same right here. It was starting to climb, huge social dominant spike, free fall. One more time as prices were climbing here, big free fall. This one, it wasn't really moving in either direction. So something in the news related to COTI happened, and that didn't really change anything because there wasn't a reversal that needed to happen. But you can see here, you know, lots of top signs going on. I would pay attention to this, you know, relatively small spike, but still a spike as prices drop. If this gets a little larger, it could be the sign of a turnaround. And that would be a good sign, considering a turnaround would mean prices going up. Weighted sentiment, we did see a lot of euphoria. I mean, this is the sign of a top right here, folks. Plain as day, this is why weighted sentiment can be so valuable. You can clearly see when things get euphoric, prices go down right after. Same right here, and even same right here. They all kind of happen at local tops for COTI, and you see a drop happen right after. Right now, still a little bit of positivity. You may want to wait until things go negative again, and then it could be a really good, you know, strategy to start feeling comfortable dipping your toes back into COTI if you believe in the asset. Development activity, I do see that it gets a little bit of development on its GitHub. You know, 3 to 10 GitHub submissions a day is not bad for an asset that's outside the top 200 or so. So it doesn't look like the kind of asset that isn't being worked on and is being ignored. So as I look at COTI really for the first time on Santiment, I see some positive signs. Like I said, I'd wait for the sentiment to potentially go negative and social dominance to spike while the price is still dropping. All right, I mentioned Cardano. You mentioned Cardano, Balresh. We can look at that next. I know we've looked at it a lot, so I don't want to spend too much time on it. And then maybe we can look at one more after that and call it a stream. So here on the transaction volume side, let's see what we got. Big spike happening just in the last few days. Yeah, that's a good sign. I'm seeing some signs of some increased utility for sure happening right now. Transaction volume in USD is at the highest point since late November. Trading volume, pretty neutral at the moment, not as good. Daily active addresses, neutral right now. Circulation, neutral. MVRV. Okay, so this is a good sign. The 30-day average trading returns is back down to negative 8% after being as high as plus 21 back in mid-January. So prices were still able to rise as the 30-day MVRV was coming down. So it was kind of just people treading water here, which resulted in the 30-day just naturally coming down as days progressed. The 365-day, there's still a lot of meat on the bone for prices to rise. You can see it has been nothing but below water over the last year for the 365-day MVRV ratio, which makes sense because over the past year, the price has dropped 70%, and that's a ton. So yeah, long term, there's still some argument that the Cardano has some room to rebound a bit, especially with the short to midterm also being underwater. There's some positive signs there for Cardano rebounding. Funding rate is neutral. Whale transactions, big spikes going on. We talked about this a little bit on our Twitter. Whale transactions, huge spikes, 100K plus. It looks like these might be profit-taking spikes though, unfortunately, because they were happening at the conclusion of, you know, this rise, which had, you know, Cardano up about 63% when the transaction spike started. And now that it's cooling off, so are the whale transactions just a little bit. They're still very high though, compared to the resting state that we saw for the past 6 months. So lots of volatility could still be expected for Cardano. As far as number of addresses, I do see an interesting spike in the 0.1 to 1 addresses. These are still very tiny, but this is kind of an anomaly. We haven't seen this anomaly since early August. Let me overlay the price really quick. We'll look at it compared to Bitcoin because it's often a better measurement for altcoins. There, make that a bar. So yeah, we saw the last time that didn't really have any impact on price. Let's look a little higher. 1 to 10 constantly moves up. 10 to 100, big drop, but this is still pretty cheap. Cardano is priced currently at 35 cents. So yeah, let's keep going. I'd say this is where you start talking about sharks right there at the 10K to 100K mark. So yeah, sharks are still rising. There's more and more addresses added to the network every day. 100K to a million. Yeah, this is a good sign. I mean, typically when you see the amount of these 100K to 1 million coin addresses drop, so does the price versus Cardano. You can see the drop stopped here in late May, and then prices started to rise again as it started to plateau. They even increased, and price versus Bitcoin stayed high. And then the 100K to 1 million addresses started dropping once again. So did Cardano's price versus Bitcoin. And here's where the anomaly starts. So looking at just the red line, if I draw November until now, the last 3 months, I should say, there's been an increase. Whoops. There's been an increase in these amount of addresses by 5%, 1,053 new addresses created, but the price versus Bitcoin is down by 22%. So, you know, there could be a bit of a bullish argument here for the last 3 months where these shark addresses are rising, but the Bitcoin price versus Bitcoin is falling. I mean, that's not saying much because we did just see a plus 60% or more rise in January, which was great to see, but it wasn't a huge separation from all the other altcoins that were also gaining huge percentages during that month. Looking at the whales here, or I should say large sharks, whatever you want to call them, 1 million to 10 million Cardano, you're starting to talk about millionaires here. They're kind of flattened out over the past 3 months, not really dropping the way they were. So that's a good sign. If we go up one more level, these are definitely where you start talking about whales. Yeah, now you're starting to see some rising. So since mid-December, almost 2 months ago, 10 more new whale addresses. And if we go up to the largest whales, I'd even just say these are exchange addresses. Never mind. I think the blue line is the largest whales, really, that are actually active. And yeah, it looks like they've been rising the last couple months. So I think that's a good sign for Cardano. Not much to say about profit to loss, pretty neutral. Dormant coins continuing to stay dormant. Social dominance, let's see if there's anything here. Let's zoom into the last 3 months. Yeah, a little bit. I mean, we're seeing a little bit of a rise right now with Cardano being talked about a little more after this big drop, but all altcoins have been dropping at about the same rate. Cardano hasn't really decoupled, but it is at the highest social dominance in a month and a half. So that could be something to keep an eye on. Cardano is in the news right now, and typically social dominance spikes can be indicative of a price reversal. So that could be a positive sign right now since prices have dropped during the social dominance spike. Weighted sentiment kind of has just been fluctuating between slightly positive versus slightly negative. And social dominance continues to rise. It looks like Cardano's team is staying busy and trying to innovate right now. So that's good to see. Yeah, I think you know, we won't even take a third asset. I think we've covered enough. My throat is a little sore. But yeah, we've had a few big videos over the past week, so definitely check out our YouTube if you want to see more expanded analysis on the metrics that we talked about today, and even some others with a few of our regular guests that I speak to. Keep an eye on the Bitcoin versus equities correlation going on. One more thing I wanted to show. Oh yeah, this poll here. I thought this was interesting. We asked, choose the closest possible option for yourself. I consider myself a blank than average crypto trader who has had blank luck. So it looks like most people say they're a better than average trader, which I expected. With good luck, I did not expect most people to acknowledge they had good luck. I think a lot of people think they're better than most, but they've had bad luck. But that's actually the least popular option. More than half people think they are worse than average traders. But overwhelmingly, it looks like about 31 plus 27, 58% of people think they've had good luck in crypto. So that's an interesting tidbit there, just in terms of traders' sentiment related to crypto, even through the tough 2022 that we all just had. Oh yeah, and take a look at this anomaly we saw in Wi-Fi. If you're interested in some top transactions, we saw the largest transactions on the Wi-Fi network in 3 months by a landslide. 3,869 Wi-Fi moved twice at the same time, each worth $29.8 million. So that's something to keep an eye out. It did appear to happen at a local top. So this could have been a profit take. Hard to say for now, but we'll try to keep you updated on more of these big whale anomalies when we see something show up. For those interested, there is a top transactions model for Sandbase Pro members where you can quickly get a snapshot of which assets are suddenly having a huge transaction on its network, which can be great if you catch it right when it happens, because it has a ton of predictive value to it. Anyways, those are some of the stories we've seen over the past week. On chain, it looks kind of mixed right now for Bitcoin, maybe a little more concerning than optimistic, but anything can happen. We'll continue to keep you posted on Twitter throughout the upcoming week. On behalf of Balaresh, and Gary, and Maxim, who couldn't join today, want to wish you all a very warm and safe weekend here, and we will talk to you soon. Take care.